was fun. I'm not going to lie. I was expecting that to be fun, and it was, in fact, fun. Thank you so much. For our next conversation, and I do use the term conversation intentionally, this is not a panel. There is no moderator. We in the journalism world are always trying to get our hands on the CEOs and presidents of companies, because that's where news is made, that's where decisions are made. We have 3 CEOs joining us on stage right now. Lily Liu, president of Solana Foundation, Tim Grant, CEO of Deus X Capital, and Mike Kuehnel, CEO of Flow Traders. Please put your hands together and welcome our panelists to the stage for Behind the Curtain, Candid Insights from Industry CEOs.
Salut tout le monde, ça va bien? Oui? Bienvenue au Louvre, c'est merveilleux, hein? Right, so last year, the reason I'm allowed to wear these glasses, by the way, is because I invented the term the Louis Vuitton of conferences when someone thrust a mic in my face last year after the speaker's dinner. It's a late dinner. And they said, what do you make of this conference? I said, it's the Louis Vuitton of conferences, so I have to look that way. So that's my excuse. Second, on the back of that, the organizers said, would you like to organize a panel? And I said, I would hate to organize a panel. I hate panels. Panels are really boring because people, and I've been on so many, sometimes I'm bored by myself listening, right? So I'm very happy to have Mike and Lily here because we thought, let's not do a panel. We've got no moderator. We haven't really talked much about it. We're just going to talk about things and we're going to try and get as close to the line of interesting as possible. So with that, I will start. Brief introduction. My name is Tim Grant. I run Deus X Capital. We're a $1 billion single family office. We operate businesses and we invest in businesses in Web 2, Web 3, and AI. Lily.
I'm Lily. I'm the president of the Solana Foundation. It's a deep-in project in crypto. Might have heard of it before.
Thanks, Tim. I'm Mike Kuehnel, the CEO of Flow Traders. Flow Traders is a globally leading market maker and liquidity provider, and we have branched out in terms of asset class coverage over the last 8 years into crypto and digital assets, that now being a key strategic theme within our company.
Let's get stuck in. I'm going to start with Mike. But remember, we've got someone who's leading one of the biggest ecosystems in crypto, someone who's leading one of the biggest liquidity providers in crypto, and me. So what are we going to talk about? Mike, a publicly traded company. We all know we need lots of publicly traded companies to get into this space. That must be, on the one hand, very powerful to be a publicly traded company, but on the other hand, I bet it's a bit of a problem. Can you talk about that?
So that's an intriguing question, and just let me start by saying we went public 10 years ago, and what has happened over the last few years is that we understood more and more what the ecosystem needs, and this is, well, if you boil it down to it, real innovation, and innovation needs capital. And what we decided last year as a public listed company is to suspend our dividend. And prior to that, we spent $1 billion in dividends and share buybacks. And what happened is that the share price on that day came down by close to 20%. But what we equally did is being very vocal and having become even more vocal on our, I would say, elevated equity story and very much building on what do we want to build in digital assets and why capital is important and what the role of a market maker is, very much coming from, I would say, tactical liquidity provisioning into becoming very strategic in building the ecosystem and understanding why liquidity has become highly strategic and will become even more strategic going forward. And I feel this is a very intriguing moment for us now as a company, as we can use the public stage we have as a public listed company to be really vocal about where we stand as an ecosystem player and member and where we want to go in deep collaboration with many others across the ecosystem going forward.
Do you think your shareholder base understands what you're doing, or do they not quite get it yet?
That's quite a provocative question. I would say it's an evolution even in the shareholder base. And maybe if you would have asked me 2 years ago, I would have said, okay, there are clearly dividend yield-oriented investors and growth investors. Now I would even say there are different types of growth investors. People who really believe in, ability of a company to adapt to new trends, and companies who are able to set the stage for deep innovation. And that's an intriguing question to further ideate on, because where do you get the capital from if you want to push the boundary as a public listed company into deep innovation? And I think that requires a different mindset across our shareholder base.
Well, innovation is another topic. Lily, I'm going to ask you, and then I'm going to let you guys ask questions. All right. Everybody understands that everyone and their dog has done a layer 1 recently. There's loads of layer 1s. We got quiet. What's up, Che? I would contend most of those layer 1s are a desperate waste of time and money and effort as an investor. Talk about that, Lily. You're presiding over a really important layer 1, but we could easily trot out the anti-Solana comments. Well, it's memes only and all that sort of stuff. Let's talk about the value of layer 1.
You're doing a great job moderating, by the way.
Apparently so.
I would agree with you. I think that because most people who come into this space if they come from the tech world, they come from the Web 2 tech world, where inherently most people are building applications. And so sort of by background and by assumption, people come to this space, map their priors into crypto, and inherently actually think about their L1s. As we really look at it, they think about it like building an application, like building an app chain. And I don't think that is what we all set out to do as an industry. The Bitcoin white paper is about a peer-to-peer electronic cash system. And the implicit dream within that is that you would have global financial infrastructure. Anyone on the internet inherently also has access to, through self-custody, a bank account. And that has been the vision from the very beginning, that you would have internet-scale capital markets, capital access for both buyers and sellers. So both, let's call it, traditionally people talked about financial inclusion in the context of all the people in the world that live in countries with poor monetary policy, which now come to think of it includes basically the entire world with the exception of maybe Switzerland. So that's a bit of an issue. We can talk about that one as well. And that, I think, is what we're actually trying to build outside of Bitcoin. Bitcoin is the asset. Who is going to be that global financial markets infrastructure that can actually serve, today, 5.5 billion people on the internet? And I don't see many folks out there really articulating that vision anymore. And I remember 10 years ago when I got into this, that was still on the tips of our tongues. This idea you would have self-custody, everyone has equal access to the same financial rails. And these days, it's been so muddied with endless research, endless white papers. Anyone can call themselves an L1. And millions of ways to euphemize and sort of talk around this architecture, that architecture. The thing is, any sort of modular architecture is a workaround. It might be a necessary workaround, but the most important feature of a financial market is to have liquidity. And the best way to have liquidity is to have unified liquidity, and you would only fragment liquidity if you have no other option. And yet, if you look at how blockchain has evolved, because a lot of people thought of blockchain as a tech platform first and not markets infrastructure first, they've traded off unified liquidity as soon as they could. And to me, that doesn't make any sense. And I think that's why in numerous places, I would say actually the majority of this industry, you see confusion, application level thinking at the protocol level, and I don't think you see a lot of awareness that if you choose architecture that forces you to fragment liquidity as a first order trade-off, how can you build global financial markets infrastructure?
I'd say that's one of my biggest bugbears. I'm also 10 years in the space, right? So you remember 10 years ago, we would sit and say, all the bonds will be tokenized in 10 years' time. How many bonds have been tokenized? Like 3 bonds may have been tokenized. Like it's not even encroaching on affecting that market dynamic. And I think the tech-first problem and the tech tribalism that started this, and we were talking about this a bit before, like intellectual rigidity is one of the biggest problems that we're dealing with, but also intellectual misunderstandings of the thing they're getting into. So if you're foundationally building a layer one to be a part of the financial system, which by definition, if you're talking about financial assets moving around, you are, and you don't understand the financial system, what happens is that a lot of people, a lot of VCs, a lot of people spent time and money, and a lot of that money went kaput and just went away. Like, well, that's really annoying to me.
I think it really matters whether you say you're building the world computer or whether you say you're building markets infrastructure. Because the articulation of what the end goal and what the end product is wildly different. And I think that to me sums up a lot of the kind of seed conversations that were had probably starting about 10 years ago and the branching ever since. And for me, my least favorite part of the last 10 years was, now I just feel so liberated I can say it, NFTs and gaming. Oh my gosh, okay? That was 2 years of wasted time where everyone in the consumer world tried to hustle in and pretend that Consumer 2.5 was Web 3. And at the end of the day, what was actually happening? Everyone talked about social fi, gaming fi. Everything was actually about finance at the end of the day. And like the ICO boom, like the NFT boom, like the meme coins, what's always been happening is you take the power of global liquidity and you point it at this thing that should have no price, okay? Because it has no value. Why is it that JPEGs can be $1 billion? I mean, there's heavily intellectual conversations to have about this, and you could talk about, social money as a social network, and community, and all those types of things, which is one way of explaining it. The other one is it validates how powerful global liquidity is, that you can even point it at things that are worthless and make them worth something for some point in time.
Lily and Tim, if I can come back to the capital point and specifically the venture funding. And one common thread I share frequently is, are we talking about isolated use cases? Are we talking about a broader play into innovating financial market structure? And to be provocative for a second, I felt, standing there in the front lane, how the world wants to provide capital to new ideas, right? And they always bring it back to, yeah, but what is the risk? Yeah, and if we step out of exploitation and drive it into bigger innovation and understanding also what it might bring to the community, to retail institutional investors in terms of benefits, is the current VC model broken? And do we need to start innovating there first in order to have the capital available, the dedication there, which is needed in order to really go into a multi-year build-out?
Well, it's a bit like you mentioned liquidity, which is a primitive you have to solve for, otherwise you're toast. I also think another primitive that's starting to get a bit traction in this conversation is VC. It's early stage investing. And our story is, I took on this role and you've got $1 billion of assets, and where do you allocate those assets? If your core thesis is you believe that financial markets will be transformed by this technology, which is our core thesis, how do you play? The problem, if you look at the VC space, and I apologize to anyone who's in here who's coming in with a new VC fund, I really do apologize, but most of the VC funds don't have the skills. Like, the people come to you with this story and you're like, you don't have the experience. Have you ever built a company? If you've invested in companies, I don't buy that you know how to build from 0 to 1 a company that's going to make a difference in this new space. And you also look at, they're all subscale, and the return profile sucks, and the liquidity profile sucks. Oh, we'll draw down on your money, and we might give you money back in 5 to 10 years. And the return profile over the last few years has been consistently bad. It's really a crappy thing to put your money in. So to me, the difference is, and this, I think there's a common theme evolving here, is like, you can't just invest. You have to be building, you have to be operating, or you at least have to have that experience. So our difference, our right to win, our right to generate returns, we don't manage other people's money, so this is just our own metric, is we know how to build companies. So we will go about this the opposite way of a VC, which is I expect 80% of my investments to fail. I always find it quite interesting if you go to a VC website and you look at, here's our portfolio, and if you were to take that snapshot, 99 times out of 100, 5 years from now, 80% of those logos will have gone. Right? That's a fact. That's the actual statistics. That's why you're crazy to start a startup, because you're 80 to 90% likely to fail. That's just the stats, right? So that's terrible odds. Like statistically and like mathematically, it's rubbish odds. Can you switch it the other way around, where 80% of your bets win, and they don't have to win big, they just have to win, and 2 of them fail? That's kind of the mentality with us. And our logic is the VC model is broken, just want to say it out loud, and therefore investing and operating is where the skill's at. But you guys are doing that, like it's the same thing.
Yeah, so I started a company called Anagram, have a team there, and so actually the first time we met on Zoom, we basically talked about the whole thing, which is that building and investing are 2 sides of the same coin. If you're an operator, it makes you a better investor. If you're an investor, it makes you a better operator in this space, and also in Web2 VC as well. And I think that there are a couple of things with, first of all, I actually think the success of crypto VCs, or the continued allocation of crypto VCs, to me again is actually proof of the point that liquidity is what matters. Because if you look at the VC construct that was essentially borrowed from Web 2 into Web 3, it is more same than different with something that's been tried and true. The fund structures and all the paperwork, it is, let's call it a capital standard, right? And because that capital standard borrowed from very successful VC ecosystem, it was also able to bring a lot of that existing liquidity into crypto. And that is why you see some of the biggest names having drawn from the same LP base who knew the principles and also knew the paperwork. And so, first of all, we should be very thankful that VCs came to the space at all. So, I will say there's a little bit of, it is easy for us to critique VCs, but I'm still glad that, that there has been capital formation in this industry for sure. But I think that what's unique about crypto is, and what's been inspiring to me about crypto from the very beginning is it's fundamentally about this idea that you have different ownership models in different ways of creating value from both human capital directly and also financial capital, and that there is more convertibility between human capital and financial capital than you have in existing capital markets, right? So one stat that we talk about is 50 years ago, it took you 25 hours of labor to buy 1 share of the S&P, and today it takes you 8 times that, $200 to buy 1 share of the S&P, and what that means is your time is less valuable to convert into money to then go buy your time back later. And so one of the reasons I think crypto is so resonant with people around the world is because it taps subconsciously into that feeling of anxiety that I'm being blocked out of capital markets, and I have no way of converting my time into something more than linear return on my time. And so I think that matters, that is a core concept where human capital and financial capital, now these are both ways that you can deploy capital and get a financial return. And I think that also translates even to the professional sphere where you think about how do I create value in crypto. Now, do I create value through financial capital by investing, or do I create value through the deployment of human capital by building? And because there's this whole concept of composability in crypto, really, I think you've got to do both. And this is where the existing structures around VC and being an RIA and the tomes of paperwork that you subject yourself and your lawyer fees to is, if you're over 150 million, you are expressly prohibited from building things. You can only invest. I understand why that exists, and I think it's probably generally a good idea, but then that makes it very difficult to sort of have a faster cycle between operating and investing that I think actually compounds over time.
Well, Mike, what about you? I know you guys, as a publicly traded company, you've always got strategic investments, but like this applies to you as well, right?
So I would like to be quite, let's say, optimistic. I also felt a lot has changed over the last few years. So I remember situations where I sat with investors and they really brought it down to what is your financial target for in 3 to 5 years. And that's one way to look at a company. But if you play the game on using the credibility you have built in TradFi, and then on top making a reference to A, what's happening around you, but B, becoming more credible for the capabilities you have built, and putting these capabilities and specifically liquidity provisioning piece into a discussion of that becoming even more strategic, I started sensing that there is a deeper understanding of what's really happening on this planet, and B, also a point on not being in a defensive seat, but taking a conscious decision to drive an agenda. So then there's a remaining challenge, and actually I'm quite excited to be here with you because we are, in a way, very committed to create a more unified vision of where the planet needs to go. What I realized a few years back when talking about digital assets, tokenization, I mean, there were bigger question marks than I would have anticipated. And it comes also down to a generational topic on why do we need it in light of the fact that we have, let's say, operating infrastructure in place that is resilient and creates all the benefits we have embraced for the last few decades. So you need to create a case where you relate to the benefits, and I now bring it to a very emotional level, right? Emotional in a sense, it's impacting you. It's reinventing how you and I will invest in the future, right? And our kids will invest in the future. And overcoming all the hurdles we have built traditional infrastructure for in order to overcome it. And I think the technological evolution is one major driver behind it. And where I would like to further arrive at, right, as a public listed company, is to frame our equity story exactly like that. That there is not just a right to embrace innovation, but a duty to embrace it in order to, as a community, overcome the hurdles we have been facing ever since. Yeah, and that's not an easy play. I would be foolish to say it's just a matter of maybe 1 or 2 more roadshows. Yeah, and I don't know where our share price might land ultimately. I can't create predictions, but I very much believe in consistency. And consistency means that you are making a point where you want to go with it, and you deliver into it. And clearly, the point we talked about earlier, we can't do it alone. Our agenda has massively shifted into becoming externally much more visible and explaining within our ecosystem, alongside you being partners, what we can deliver and also equally what we need from you in order to simplify our investment thesis and our resourcing according to that.
We know you make this point about collaboration. I always said in previous panels, the 20th century financial services model is actually predicated on being quite adversarial, right? You know, I started in 1999, so I got the tail end of the sort of 20th century model, and it's genuinely aggressively adversarial by definition. What I loved about crypto is that it wasn't. It has other issues, but it was a bit more open in terms of working together, and that felt like a strong evolution. I'm going to switch tack. Let's do the innovation thing. All right. Please put your hand up if you genuinely think that you've done something innovative in this space that you're in. Innovative. Okay. See, I would say that's about right. Right? It's 6 or 7 hands. I would say if more of you had put your hands up, you're lying. Right? Like, I actually think that's healthy. Good, well, top marks, crowd. Because like this is a bugbear I have. I'd love us to talk about it, innovation versus evolution. And I'm going to talk about it in the context of AI. One of the artifacts of this fourth industrial revolution we're in is that it's much easier to create music with less skill than people 20 years ago. It's much easier to create content. It's also much easier to present yourself as someone who knows things and is innovative when you're not. And I think those of us who've been in crypto for a decade will say, yeah, a lot of the people who used to say they were blockchain experts really were not. I think it's even more acute now. The number of people who claim to know AI, let's pivot to AI because it's relevant to all of us, but actually it's so easy to find out that they don't, is a little bit worrying, right? It's worrying about the bedrock of genuine innovation that's happening. It's too easy to jump on the bandwagon. It's ICO's gone mad, right? So everyone's in AI now, and actually, I would argue the vast majority of projects often aren't even AI when you get down to it. Let's talk about that a minute. Like, for a publicly traded company, for a large and important ecosystem that needs to grow, Lily, where are you on this AI thing?
I've been in high growth markets for 20 years. I like high growth markets because there's things to be done, generally optimistic, but you also have quite a large long tail, and you see that that's just a feature or a bug, whatever you want to call it, of a high growth market. If you don't want to be in a high growth market and you want to have certainty that everyone's going to be right smack dab in the middle of the mid curve, you can just live in Europe, right? And so with AI, yes, absolutely, it's true that people, edited their websites, and now everyone's an AI company. And what used to be big data, all of that got, mad-libbed into AI. That is true, and you kind of have to do that. Imagine if you didn't do that right now. That would be unacceptable to not do that. As someone who's been in crypto for 10 years, I feel like I've just been inured to overhyped narratives. In a way, I kind of feel like that's what we do, and we're just kind of like dead to it almost. Remember Bitcoin, ICOs, remember ICOs? Colored coins. There's too many, I can't even remember anymore. NFTs, GameFi, my two least favorite ones. Meme coins, haven't heard of those before. And, and there was a deep-in way, it's just, every 6 months or every year there's going to be a new one. And so for us, we have to filter through, is this hype cycle 1% quality, 10% quality, 50% quality? Even now, I feel like every other person I meet is building a tokenization platform. Yeah. Okay, cool. And that's our job in a high growth market, to be able to discern quality from quantity. And the shape of that funnel is going to be different in every geographic market, in every industry, in the intersection of those, in the subvertical that's popping in crypto right now. And I think that's a core part of the skill set to be in this industry.
Tim, maybe to that point, I think there is a kind of convergence between traditional equity investors and people who want to be in a seat of an anchor investor with a different risk appetite, even for a public listed company. So the unfair part is, if we would have never started our crypto and digital assets business, people would basically expose me to the question, is that not a big threat for you? Yeah, now we are globally leading on that field. People ask me, but where do you go from there? And what is the real prospect? So what I sense is that the more we go outside and speak with people explaining the story, and hopefully you do the same and it resonates in the community, people have an open ear to become more this anchor investor type, right? Who wants to be part of that journey and also realizes that there's still a foundation, right? We are not going into a big multi-billion-dollar bet and just wait and see. We are taking it step by step. Maybe that's the difference between a private company and a public listed company, that we always need to go back to the foundational value of the company and relate to the optionality we have strategically created. And then coming back to consistency, being able to explain how to build a house. I'll give you one very concrete example. So we teamed up with Galaxy and DWS on bringing All Unity to the European landscape market, so the euro-denominated regulated stablecoin. When we announced it the first time, I had a mini roadshow. And our core investors looked at me and said, what the heck is a market maker doing with this strategic stablecoin investment? And I really took a few steps back and started talking, and I normally get quite excited about it, talking about the acceleration, the liquidity bridge between TradFi, DeFi, the convergence, and all these bits and pieces. If I have to be that honest with you, it didn't resonate. It didn't resonate. But now, it resonates. It starts resonating. And I feel this is the power we can collectively create and make sure that the more we talk about it, it's actually quite clear what a Solana is doing and why this is unlocking significant value, what a Deus X is doing in this ecosystem, and what Flow Traders is doing in this. I feel it's probably fair to say that the story has not yet been fully told, right? And the key question remaining for me, how to further accelerate. So acceleration is not just a matter of capital, it's also about the ideas. And in a way, and we talked about it a million times, how can we break that silo thinking and create use cases that really create the notion of us building a big house, right? Which addresses all the concerns people still have and brings us into the deep benefits, right? We feel 24/7 is creating, and fractionalization and democratization of financial products is creating. But I remain excited about it. Yeah.
You know, it's like it's the reframing of the problem. I just heard myself saying about the fourth industrial revolution is defined, I think, by the beginning of the silicon chip, and then you add all the things that come next. And AI is just the latest iteration, and there'll be more, right? But what we know is that the rate of change itself is accelerating. So the mental energy required, the education on even like very educated people to understand AI. You can't just read the Sunday newspapers and boom, you've understood AI and the impact that it will have on multiple industries. You can't just read about crypto, layer ones, Bitcoin, and just get it. You actually need to put the time in. Could it be foundationally and fundamentally true that as a species, we're not really good? We're not really used to this. We've never seen a rate of change like this, so no wonder we get all memey about it and we grab onto things we don't truly understand, and it creates this dynamic. And it's like, I feel like you're talking about fighting against the mind shift. Think of the boardrooms in the corporate world where we all know they don't really know what any of this is about, right? The big CEOs, names of which we could cite, who probably don't have the time, genuinely don't have the time to understand AI. So I'll talk to my CTO, and I promise you the last people you want to talk to about AI is people in large corporate companies. It's kind of fascinating. Is this relevant in your world?
Well, what I like about crypto is, at least in the early days, it was full of contrarians. Now, some people are extremely contrarian, maybe too contrarian about everything and too many things, but what that filters for is folks that focus on the minority of people rather than the majority of people. And actually, most folks, they want to be a part of the herd. And that is, to an extent, a cultural thing. I think it's also just an inherent risk-taking thing. That some people are just born more risk-averse and less risk-averse. And so the majority of people will want to be with the majority. And so the majority of people out there are going to be boring and are going to be not creating the future. You don't need the majority of people to go create something. And so when you look at it, in every situation, you can always be critical of what the majority is doing, because definitionally they're doing the same thing as yesterday. And you really only need 1 or 10, not even 10%, 1 or 10% in order to completely shift something. I think this is one of the fallacies when people look at, for example, even voting. Oh, well, it's a minority of the country. Only 33% voted that way. It's a minority of the country. You're like, it's a totally wrong way to look at it. Because in order to completely shift the Overton window, you don't even need 10%. And so that is always where change comes. You need capital formation and talent formation around less than 10%, probably 1%, and then the rest will follow, right? And so that is, I think, what we in crypto have, that is like our real skill set that we've been refining in orthogonally related ways, which is how do you create excitement and social excitement, that kind of religiosity that we've all experienced in crypto before, around an idea, a technology. And we're so good at it, we as an industry do it all the time over things that are worthless and should not exist. That's how good at it we are.
Well, that's the dichotomy, isn't it? On the one hand, you need that unbridled, contrarian, I don't care how it's been done before, we're going to do it better for the people, by the people. You need that. And then you've got the other side, which is well, no, we've built a financial system for decades and it's quite resilient. And there's sort of somewhere in the middle is the answer, and it's tough to get these factions to come together. I wonder what the answer is going forward. How do we, because it's only going to get more acute, I think. Maybe we finish on the topic of tokenization, because I think I'm with you. We tokenized a bond in 2016. I was the CEO of Six Digital Exchange, which was supposed to be the venue where all the bonds would trade. None of the bonds trade there, unfortunately. Great team, too early, bad idea. Everybody's got a tokenization platform. It's the most commoditized thing there is. Nobody seems to be talking about the thing that we're going to tokenize and why you need to do it better. I'm kind of getting really upset with tokenization, even though I know we have to go there. Last thoughts on tokenization?
Specifically on that one, we did a strategic deal with R3. So now specifically those Swiss bonds, if they're going to be anywhere, they're going to be on Solana, because the history of the last 10 years of private blockchain has been that this is the safe, compliant, no North Korea here environment. But then the issue with it comes back to liquidity. There are no counterparties and there's no cash leg. So what are those assets going to do? They have value, they inherently have value, but they have no price. There's no market. And so how do you push beyond that? Okay, well, you have to be in an environment of shared liquidity, and that is why those assets now are going to have life breathed into them, because you have enough maturity in public environments and liquidity in stable coins, basically, to put a market around that.
Mike, it's all about liquidity, man. That's what you do.
I heard that before. I have no doubt about tokenization happening, and I remember the early talks we had on whether tokenization might start on the liquid or illiquid side, and then, well, it took a bit longer. But the reality is we took a very strategic choice that we increased the agility in our tech setup to a level where we can immediately adapt and want to adapt. And I feel, if you ask me now in a very open way, why tokenization has not yet taken the main stage, it's also about people not yet knowing what kind of experience they could get if you could trade 24/7, right? If you have one wallet, right, and everything is just in one wallet, your tokenized real estate holdings, your liquid holdings, anything, right? And you can trade in and out whenever you want. I mean, once you embrace that experience, there's a significant adoption curve behind it. And I feel this is the problem. When we talk about tokenization, it comes across as being a technical term, and what are we talking about? Why do we need to reinvent the world? But we are actually talking about a whole different investment experience. And by the way, I also want to build a bridge into wealth distribution across the globe. Because one key element in tokenization is the sheer amount of people not having a bank account, right? And we talk about wealth distribution across emerging countries and markets. So I also feel that's a duty we have as ecosystem players to just recreate that and create a new, not just experience for the people who already experience financial investments, but branching out and making it a dual global effort. I think that's quite critical and possible. Yeah.
Well, I think our time is up. On behalf of Lily and Mike and myself, thank you. Thank you for being honest about being innovative, because there can only be so many of you that are innovating. The rest of us are not. I'm not innovating. Guys, enjoy the rest of the conference. Enjoy the beautiful Parisian night. À très bientôt. Merci.
Thanks, guys.